Okay, so this video right here was not meant for YouTube. I originally recorded this video for all of my private one-on-one mentorship students, but after watching the video back, I realized I just can't keep this to myself. This video is 47 minutes of pure value. I'm explaining exactly how I am trading gold. I'm explaining my mindset, my strategy, and why I've personally made the switch from trading Nasdaq and Q futures to trading gold and gold futures. I also explain a little bit about mindset and exactly what you need to become a consistently profitable trader. There's gonna be no fluff, no edits, just me walking you through my personal real-time market experience. Now look, I understand not everybody can join my mentorship. You know, some of you guys don't have the right finances, the right headspace, whatever it is, right? But that doesn't mean that you can't level up and still learn how to trade and become a better version of yourself. So I finally decided, you know what, I'm gonna go ahead and post this unedited, raw video filled with tons of value so that you can learn, even though, you know, you might not be in my mentorship, you can still be able to learn and benefit this and be able to level up and take yourself to finally becoming a consistently profitable trader. Grab a notebook, lock in, and let's go ahead and get right into it. Yeah, since I already have the gold chart loaded up here, I'm gonna go ahead and get right into it right here. Now, I want to emphasize something when trading gold. When trading gold, it is best to utilize the higher time frame. Now, why is that? Okay, because whenever a lot of futures traders are trading Nasdaq, we tend to trade the very lower time frames. But gold, the lower time frames do not move very smoothly. It's very choppy. Price on gold does not move a significant amount of points like it does on Nasdaq. The daily range on Nasdaq may be upwards of a couple hundred points, but on gold, the average daily range is going to be around 50 points or so. Okay, and we'll get into how we can calculate the average daily range in a bit, but the average daily range is about 50 points. So with that being said, I like to utilize the 15 minute, the 1 hour, and the 4 hour time frame. Sometimes I will drop down into the 5 minute time frame to get a little bit more clarity on the 15 minute, but ideally I want to be waiting for 1 hour market structure shifts, 1 hour changes in the state of delivery, and overall entering on the PO3 of a 1 hour or 4 hour candle. So let's kind of build up some narrative right here. I want you guys to pay attention to market structure. Now I'm gonna completely clean all of my chart and I'm gonna restart it like everything. Now, when it comes to gold, I don't really separate the sessions, okay? That's the difference between trading Nasdaq and trading gold. When it comes to gold, I don't really care about separating Asia, London, and New York because I know that gold moves whenever, okay? And I'm using the higher time frame. So whenever the higher time frame presents itself, that's when I'm gonna get in on a trade. Okay, I could separate the days, but because right now we're on the 4 hour chart, that's not really necessary. So yeah, let's just build up some narrative, okay? We're gonna start out with the month of July. So I'm just gonna simply mark out July 1st right here, which is gonna be Tuesday, July 1st, right here. You can see that on gold, that's the first. Well, even let's just go to the 1 hour chart and mark it out for us right here. Okay, so that's July. Cool. Okay, yeah, it's gonna show as the 22nd. That's fine. Okay, cool. So we currently have that there. Now, what is the narrative telling us? Okay, because every time we get on the charts, we want to have narrative, you know, played out. So I'm gonna zoom out extremely far. I want us to pay attention to overall structure, okay? Now, there's gonna be a lot of different structure here, but I'm just gonna mark out a few key structural points, okay? So this is currently the highest high and then currently the lowest low. Now, why is it that I chose this low right here and then not this low or this low or maybe even this low? The reason why I chose this low right here is because this low swept liquidity right here. Okay, on top of that, this low broke structure right here, caused this break of structure right here, okay, where we not only broke it, but we closed above, forming a new higher high. Now at the point right at breaking it, this was the structural high, but then once we pushed through here and then even created this high, and then obviously this is the high that gets created, this becomes a new structural point. So from this low up to this high, this is our current dealing range on the higher time frame, our overall dealing range. Now within overall dealing ranges, there can be internal dealing ranges that we can take a look at, but this is our overall dealing range. So we're gonna keep that in mind, okay? Now I'm gonna go ahead and delete all of my drawings here and get right back into it. So this is our overall dealing range right here, and I'm just gonna simply mark this out. I'm gonna make it very, very subtle for you to see a black line, make it thin, and then this is our overall dealing range, okay? Now within our overall dealing range, we're gonna have internal range dealing ranges. So you can see here, okay, this low right here is our protected low within this current swing point. So if we were to take a fib, for example, from here all the way down to this low right here, and we were to use the 50%, the PD range fib, where it just demonstrates us the 50%, okay? Now again, why am I choosing this low? Okay, because this low, again, it's all about narrative. What swept liquidity? What is responsible for breaks of structure? This is the low right here that is responsible for sweeping liquidity, okay? Hold up, let me change the settings on this because it keeps giving me issues. Save as liquidity. Save, yes, okay. This is the low that is responsible for sweeping liquidity. On top of that, what happened here, okay? Remember what I taught you guys before, okay? This is a structural swing point right here, okay? This entire swing point right here on a higher time frame, right now we're on the 4 hour, on an even higher time frame is going to represent us an order block. So notice how price comes out of this structural point after breaking through this high, and now we're coming back down into the structural point. Okay, we're trading back into it. We're coming, if you take a fib from this high, okay, down to this low, okay, we've come down beneath the 50% of the range into a discount. We've swept internal range liquidity. I'm sure there's going to be imbalances. You can see here, there's clearly imbalances resting beneath here. Even on a higher time frame, you're gonna see the extensiveness of the, imbalances. So price comes down into these imbalances, and then what? Okay, because we've come down into the discount, where am I expecting price to go to? The premium. Now, I'm not saying that it needs to come out and take out overall highs, because at one point this was all-time highs. Gold had pushed up aggressively during April, and we had hit all-time highs, but then now we're kind of just consolidating within this range of this current protected low right here and this overall dealing range high. Okay, now within it, notice how we're starting to scrunch down. We're creating smaller ranges. Okay, so now that we have this overall range identified, now we're gonna kind of zoom it in, and this is how we're gonna be able to bring it all the way from a very higher time frame sentiment down into the lower time frame to where we can actually execute upon the charts. Okay, so now we have this overall range. Now, again, going back to what I was saying earlier, okay, real quick, price comes down into the discount, sweeps this liquidity. Now where are we going? Where do we need to go? We need to go to buy side. Okay, so I'm expecting price to come up all the way to here. Now, if we zoom in real quick and we take a look at the highest highs here, notice here, this candle actually failed. It never took out that liquidity, so that's still valid. Okay, so this is gonna be our high and this is our low. Now notice again, what happens here? Okay, price fails to take it out, but then now we come back down into the discount, and what are we doing? We're just sweeping liquidity. So right now we're stuck in consolidation, so on the higher time frame. So price is just going to be ping-ponging back and forth. So now let's bring up some more narrative here, okay? We're now stuck within this range. Every time price comes back down into the 50%, it's gonna do two things. It's either going to continue and push down, or it's going to reverse and push up into the premium. Now, upon sweeping a low and a discount, beneath the 50% of the range, what do we expect price to do? We wanna see price reverse or retrace. In this case right here, okay, and notice what I said. I said sweep. I didn't say break and close through, because if we break and close, for example, had price broken and closed through this low right here, we would have likely continued down. But the market is always telling us exactly what it wants to do. Okay, the market just doesn't do things randomly. Everything is algorithmic. It's showing us signs. So for example, obviously this is a 4-hour chart, but let's just imagine you took a setup short right here, okay? And you're targeting all the way down to this low right here. Okay, let's just say for some reason you wanted to target this low right here. How do you know whether to hold? Or maybe you were even targeting, you know, somewhere around here. How do you know whether to hold your trade or whether to take your profits at the first target, which is obviously this resting sell side liquidity right here? Okay, you know to take your profits based off of how price is reacting upon reaching these levels. So notice here, okay, price came, we took this low out, and what did we not do? We did not continue to push through. Why? We have this order block right here. Okay, now we never really tapped this order block on this specific candle, okay, but what we did do is take out this liquidity and completely rebalance this imbalance, and it was already rebalanced, but we came back into it again. So you can actually mark out this imbalance right here. Okay, we can mark out this imbalance. Notice how the bodies of the candle are respecting the 50% of this imbalance. Okay, the 50% of this imbalance is being respected right here. Okay, so we had one try. Okay, cool. The first candle hits it, that's fine. I'm not just going to immediately remove my trade because the first area of or the first candle that hits it just rejects immediately. That's not what I'm gonna do, because I'm gonna give it the benefit of the doubt. Okay, we could still continue to push. Okay, but maybe we just needed to retrace on a lower time frame, and then the next candle is gonna come. Okay, cool. So now what happens? The candle following this down close candle, taking out this liquidity, we form an up close candle. That's a good sign. Okay, what is that telling me? That there could be a potential change in the state of delivery. We were simply coming back up into the range after sweeping liquidity, because after sweeping liquidity, we always expect some sort of reaction. Whether that's going to be a slight retracement or a complete reversal, we have to watch and see what happens here, or you know, based off of our expectations of where we're expecting price to go. Okay, also we have to take into account, what did we just do? We've been delivering from the premium, okay? We've been delivering from the premium, and then now we're coming down into the discount, and then we've just swept liquidity. So we want to be mindful of that. Okay, so this candle right here, it closes bullish. That's fine. Okay, we still haven't disrespected this area. Now notice here what we have here. Okay, we have this is a redelivered rebalance or an immediate rebalance. We have both present. Okay, we have this fractal right here, okay, which represents a redelivered rebalance, which is, it's a fractal. Okay, there's wicks on both sides. I don't want to see this violated, essentially. Okay, on top of that, we have something called an immediate rebalance, where price forms a small gap and then the next candle opens and then immediately rebalances it and then displaces away from it. So this entire area here is already entirely rebalanced. If we're going to continue lower, this area should not be violated whatsoever. Okay, notice here now, this 4-hour candle opens, and then what does it do? Or what does it not do? It doesn't take out this low right here. It doesn't even, the body doesn't even close with a nice down close candle. Like, ideally, I would have liked it to close beneath here. Okay, that would have indicated to me, okay, we're likely going to come and take out this low and we're going to continue down. But that's not what happens. Now, if I was in this trade and then this candle was this candle would have done that, immediately I'm trailing my stop loss above here. My stop loss is now going to go get trailed right here. My stop loss is now going to get trailed right here. Why? Because if we're actually going to continue down lower, then we should not violate this high. Why? Because there's no more imbalances. This area is entirely rebalanced. Now, this candle does come, it opens, it pushes up, and then it comes all the way down. So at a certain point, this entire candle was a bearish candle. So in my head, I'm probably thinking, okay, we're going to continue down. And that was probably a good sign. Okay, so up until this point, you still haven't been stopped out. Now, maybe you held this trade and you got out at this order block right as you're seeing a rejection on the lower time frame, and you're like, okay, we're probably going to exit right here, and that's fine. You might have been able to catch the trade all the way to down here. But worst case scenario, you would have been stopped out probably right here on your trailing, which is still a great risk to reward. That's still a 5R. Now, obviously, this would have been a whole lot better, and maybe you took partials or you collected your trades or whatever, but this is kind of how you want to frame your setups. Now, obviously, this is off a 4-hour time frame, but what I just taught you can be applied to any time frame, you know, that you're trading on. This is just understanding candlestick closure and understanding price in general. Now, okay, I'm gonna delete all of this and I'm gonna get back into the overall narrative that we've got going on right here. So we can see here, okay, what's going on here, okay? Price has reacted off of this order block right here. Okay, notice how the 50% of this is being respected to the T right there. Price is just hitting it perfectly. We have this 4-hour order block right here. Okay, cool. Okay, so again, we're no longer using this overall dealing range. Why? Because we've created a smaller dealing range that we're now gonna zoom in and kind of aim and target now. Okay, so again, what are we expecting? Okay, we want to see one side or the other get broken. Now, whether it's gonna break the sell side or break the buy side, I'm not sure yet. Okay, but again, we're just watching and we're monitoring price. So up until this point, you could have taken shorts. Why? Because we're above the 50% of the range. Okay, so price comes back down into the discount. Immediately upon failing to close beneath these lows, and we've rejected 1, 2, 3, 4 times. We've rejected 4 times off of this fair value gap, off of the sweeping of the low, off of this order block. We've rejected multiple times. Okay, what am I gonna do now at this point? Okay, let's just say I came onto the charts on this given day on, all this happened on a Sunday, okay? So now, you know, it's Monday or whatever, I'm gonna drop down. We obviously know these are 4-hour time frame PD arrays. Okay, cool. So this new day opens up right here. We have Monday. Okay, Monday just opened up. Let's just play price a little bit right here. Okay, cool. Right now it's about 8 o'clock right now, okay? Now, what do we see here, okay? We see there was a sweep of liquidity. We had a nice break of structure right here, okay? We're also reacting out of this fair value gap again. In my head, immediately I'm thinking buy side here is gonna get taken. At least that's what I wanna see. Then we also have this area of buy side as well that we could potentially target. So right now, this is the 8 o'clock hour on Monday, June 25th. So what am I gonna do? I'm gonna drop down into the lower time frame. Okay, and what am I gonna be waiting for? Okay, I want to see, okay, how can I position myself to get in on a trade like this? Okay, so the 15-minute brings a little bit more clarity. It brings a little bit more in-depth storytelling for us. Okay, because what just happened here? What do you see here? Okay, and I'm asking you this question. Obviously, this is not live, but I want you to think as you're watching me teach. Okay, I'm gonna drink some water real quick. Think and see, what do you see here while you're watching this? Okay, so now you've probably just thought a little bit about what you see, okay? I'll tell you what I see. I see that we've swept liquidity right here. We've also swept higher time frame liquidity. So this blue line here represents higher time frame liquidity, okay? We've also reacted off of this 4-hour imbalance, okay? We've reacted off of this, this 4-hour order block. This here represents, this orange represents a 4-hour order block. And then here, this blue represents a 4-hour fair value gap. And it's important to keep these things labeled. And there's a reason why I've now switched from using only gray boxes to differentiating my order blocks and my fair value gaps, just so that when I'm on the lower time frame and I can't see the label, at least I can see that, okay, this is some sort of point of interest. Okay, so this right here, the blue for me represents the fair value gap, and then the orange here represents the order block. So what do I see here, okay? We swept this low right here, and then immediately we displaced. What happened upon displacing? We had a change in the state of delivery right here. Okay? So we had a change in the state of delivery. We had a change in the state of delivery, okay? Now, price opened up we pushed up again, and then we came back down. Okay, now what did we do here? We rebalanced this entire imbalance upon sweeping more internal range liquidity. On top of that, we did come back and retest this fair value gap. Okay, cool. Now what did we have here? Price swept this liquidity. Immediately, we had another change in the state of delivery right here. This is very, very textbook. Like, I love this price action. It's so clean, so clean. We had another change in the state of delivery. This is how I used to trade. Like, Nasdaq 1 minute chart has ruined my trading. Like, ruined, but at the same time, it's also helped it. Why am I saying this? Because I've been so heavily focused on the 1 minute time frame for so long, and although it's amazing, you can catch crazy risk rewards, it makes you impulsive, it makes you impatient, and it makes you overthink sometimes when you're on the lower time frame. But when you're on the higher time frame and you have less opportunity to take trades, it keeps you centered, it keeps you focused, it keeps you consistent. Okay, and this is why sometimes there's periods of the year where you have to go from consistently scalping, trading like this to maybe taking a break or going onto a different asset or trading on the higher time frame. And then this is going to give you that peace of mind, because it's not good to be trading all the time. Okay, we're trading for freedom. We don't want to be stuck on the charts 24/7 all day, every day. It becomes draining. We have something called our mental capital. Okay, and just like, you know, you have energy throughout the day, your mental capital also will slowly decrease. So whereas, you know, you're going hardcore for 2-3 months, you're studying, you're trading, you're on the charts every single day, eventually you have to take a break or else you're going to burn out. And when you burn out, you're going to start making irrational decisions that are going to lead to you potentially losing more money than you should, because you can't properly think. Your brain is clouded. And I recently experienced that, and I had to take a step back. Why? Not because I don't know what I'm doing or because I don't know how to trade, but because I want to be able to progress and push myself forward. You have to know when to put your foot on the gas and then when to take your foot off the gas and slowly step on the brakes. Okay? You can't keep driving 100 miles per hour every single day. If you're driving on the highway, you can't keep going 100 miles per hour the whole entire way. You're going to crash. There's times where you have to slow down, speed up. Maybe you have to slam your brakes sometimes because there's a pothole or maybe there's traffic or something. Okay, so take this analogy and apply it to your trading. I promise you, you're going to find yourself a lot more consistent. So going back into the charts here, okay, we just left. Okay, so let me build the narrative again, because you know you might have just forgotten after that conversation I just had. So we swept liquidity on the higher time frame, and then we also had this sweep right here. Okay, remember what I taught you guys before. It doesn't matter what time frame you're trading on, whether you're trading on the 15-minute or the 1 minute. If you're using a time frame that is higher to mark out certain POIs, points of interest, in which you're expecting price to react off of, do not just enter upon price hitting this POI unless you want to have a higher time frame stop loss. Okay, so unless you want your stop loss to account, so let's just say you entered here upon price hitting this fair value, unless you want to have a large ass stop loss right here to account for all of these PD arrays. Okay, don't just enter immediately upon price hitting this area. Okay, you want to wait. Ideally, the first time that price hits a POI on the lower time frame, it's going to get swept. Okay, in this instance right here, okay, the 15-minute chart, we come down, we sweep this area, and then now we see a change in the state of delivery. That's telling me that, okay, we're going to push up. Okay, so we then, market opens, or we have midnight open here, price displaces up higher, we come down into the discount again, we sweep this internal range liquidity, we rebalance this imbalance. Okay, yes, we don't tap here, but we do tap into the wick, that's fine. Okay, this area is entirely rebalanced anyways. We have a balanced price range, a BPR, where we have a imbalance here and imbalance immediately after. Essentially, you don't want this to be violated. We also had an order block right here that gets created. So price comes down, we trade into this 15-minute order block right here. We have this 15-minute order block that we trade into right here, and then we displace. Now, not only do we displace and have a change of the state of delivery, but we had swept liquidity. We also had a market structure shift right here. Now, what makes this a market structure shift? This is a market structure shift because this is a swing point. Okay, on the lower time frame, if you go to the 5 minute, this is going to be a swing high. Okay, this swing high gets violated and broken through and closed above. Okay, now price is coming down into this area. Now, I haven't seen price up until this point, but based off of everything that I've told you guys here, this for me is going to be an area in which I'm expecting to buy. Okay, so the safe entry, and this is a large stop loss. Okay, this is quite large. If you're trading with 1 mini on here, you're going to be risking $800. So that's a lot of money. Okay, but this is essentially, if you're entering directly off of here, this is going to be a trade in which you would experience, potential drawdown. But this is a safe stop loss for me. If you go up to the 1 hour, you can see here how price is looking. Now, we might come and sweep this low here. I don't know. But based off of everything that I've just explained, again, I don't know whether this entry is going to hold or not. I haven't seen anything yet. Okay, but based off of, because I just cut it, like I cut the replay mode, I don't know. Okay, we're just playing it how it goes. This is an area where I would potentially buy. So let's just buy right here, okay? Stop loss is going to go right here beneath this low. Again, we're risking $800 off of 1 mini. Okay, now let's see. My first target is going to be right here. Okay, let's see what happens here and how it plays out. Okay, we're in a bit of drawdown. That's fine. Boom. I told you what's going to happen. Okay, and I had a feeling that we were going to go into drawdown slightly. Now, why? Because this is the real, I'm not going to say real order block that gets created. Obviously, the order block is composed of these 2 candles, but price is going to at least come into the 50% of it. And we entered before the 50%, but when there's a large order block, price likely comes down into the 50%, or it will likely come into the opening of the bottom, the lowest candle, especially if it's a large candle like this. So, excuse me, if there's a large order block like this, expect the 50% of it to get hit. So, shit. I just messed that up. Let me, I just messed that up. Let me cut this. Give me a second. Okay, I just cut that. Let's redo that again because I just messed it up. Okay. Oh wait, I'm gonna go back to the original entry that we had. We're gonna buy right there again. That was a mistake I made. Okay. Okay, stop loss right there. Okay. Yeah, so I forgot what my train of thought was, but yeah, essentially price is gonna always come, 9 times out of 10 it's gonna come into the 50% of the overall order block, but most of the time if the body of this first down close candle is a large body like this, like if it's a small one like this, I don't expect it to get hit, but if it's the large one like this, I do expect price to come into it. But we're gonna keep this marked out here for us. Okay, now let's start to play price a bit, okay? So we already saw that we were gonna be in a little bit of drawdown, nothing crazy, and then price starts to push up. That's giving me confidence right here, okay? I'd love to see this, okay? Why? Because this candle just immediately stopped. Look how it stopped perfectly right at the open of this order block right here. That's algorithmic, that's not coincidence. Okay, that's completely algorithmic. Price stopped right there at it, and then now we're beginning to push up. So now that we have this down close candle right here, this up close candle got formed, I'm expecting price to do what? Take out this high right here. Okay, I want to see price take out this high. This high is already also swept this area of liquidity right here. So I'm expecting this high to get taken, so let's just see what happens here. Okay, we came and we swept this low again. Again, you're not moving your stop loss until this structural point gets created. Until price takes out this high, you're not moving your stop loss. So you have to be comfortable with the risk, okay? Again, you're just letting your trades play out. You're not having super tight stops here. You're having good, safe stop losses, okay? Like, yes, you could have technically kept your stop loss beneath here or whatever, but the safest stop loss, the safest stop loss is going to be right at this low, because just let your trade breathe. Like, this is the problem. A lot of us, sometimes we have too tight stop loss. Maybe you entered with too much risk, whatever, but no, just let your trade breathe. I promise you're gonna have a lot more winning trades. So we're gonna let our trade breathe and play out. Let's just see how it works out in our favor, okay? Boom, now we're starting to make some movement. Again, I'm not trailing my stop loss yet. I'm gonna let it play out. I've already acknowledged the risk at hand, okay? It might BS a little bit, that's fine. Don't get scared, okay? It came up close to it, that's fine. Again, we don't expect price to just react immediately, okay? It's only 10:15. It's a Monday, okay, cool. Now we've taken that high, okay? Now that we've taken this high, okay, now I'm gonna consider trailing my stop loss, where I'm gonna trail it right here now. So I've now reduced my risk, okay? I've reduced my risk. I wanna see price displace through, okay? I don't really like the fact that we're consolidating here, but that's fine. It can consolidate, that's fine. I'm just gonna let it play out for me, because I know that it's gonna continue to push up. Boom. Now we're getting some positive movement, okay? At this point, I'm putting my stop loss at break even, and I'm not really worrying about anything. And I would put it slightly above break even, and we have this order block right here. It's also beneath the 50% of this new order block right here. We've had a change in the state of delivery. So this is another change in the state of delivery where our stop loss is now beneath the 50% of here. So we're good. Okay, let's see what happens here. Okay, we're consolidating again, that's fine. I wanna see price push up the next candle, yep, cool. And now I wanna see the next candle push through. Boom, push through. Okay, now at this point, that's when I'm gonna start trailing my stop loss. So at this point right here, I don't wanna see price violate this area. Why? We have this order block right here. We also have this inversion fair value gap, this small little inversion right here. Now I'm gonna go check the higher time frame as well. This is a 15-minute inversion fair value gap. I'm gonna check the 1 hour, okay? Let's see wait, what time is it here? Yeah. We have the 1 hour time frame right here. I wanna see price now start to push through. We've already pretty much violated majority of here, so I wanna see the next 1 hour candle come and then push up. This area is entirely rebalanced already. This is a 1 hour change in the state of delivery, so because this is a 1 hour change in the state of delivery, I'm not expecting price to come back down into this order block yet, until we at least push through this high. So I wanna see the next 15-minute candle push directly through this high right here, okay? Let's see what happens. Okay, we came down, that's fine. Okay, cool, we're pushing. Boom, we're now up, okay? We're up a lot of money right now off of one contract, okay? We're up $2,400. We're managing our risk properly. Now, based off of all of this, now what am I gonna do? I'm gonna be trailing my stop loss to right here. There's no need for us to come back down into this area. Now, if I go back to the 1 hour, you can see here how it's an order block right here. I'm honestly probably gonna trail my stop loss to here because there's no need to. We just formed this imbalance right here. If anything, I want to see price come back down and then rebalance this area. Now, this is how we're gonna be able to frame holding our trades, okay? Now, it is still Monday. I don't know if we'd be able to hold our trade through going into the next day, which most people on prop firms can't do that. But this is how I'm going to be positioning myself. At this point, you have two options. You can either close your trade right here. We are up a lot of money, or you can hold it. If you are on a Forex prop firm, you can hold your trade. But most of the prop firms that we personally trade on, you can't. So at this point, I would probably terminate my trade. So let's go ahead and sell here. Oh, flatten, sorry. I did that wrong. But yeah. Oh shit, why did it mess us up? Either way, we made $2,600 on that. I don't know why it's messing up right here, but let me actually redo that. That's weird, so. Real quick, let me redo that because I want us to reflect the proper profits. Okay, there we go. Now, the only reason why we close this position right here is simply because we're going into the next day, okay? It's already 4 o'clock on this given day. We can't hold our trade. Let's just say you enter this on a platform or something. So I'm gonna mimic it as if we're trading like that. So again, we can't really do anything in regards to holding this trade. So now we're just gonna wait for the next day to form. Right here, so I'm just gonna play it out a bit. Yeah, I mean, we're gonna continue. We're probably, yeah, we would continue, and that's fine. Again, you don't have to catch everything. Wow, look at that. Like, this is a great trade that you could have swung. Like, this is, I'm gonna see if I can swing trade on my personal account, because this is crazy risk to reward right here. And then you can just add stack in entries as well as you're going. Like, this would have been off of one mini. I mean, you're making 71 times 100. Yeah, this trade would have yielded you $7,000 simply off of one contract, which is crazy. $800 risk, $700, you know, all the way up into this high. And I pretty much knew that we were going to come up into this high at least, but it's kind of hard to hold your position. Now, one thing that you could do is get out of your position right at like you can get out and then get right back in upon market open or whatever, but you'd have to have a stop loss and account for the trade. But there's a lot of different ways you can do it. You can't unfortunately hold your trades on a prop firm, which sucks. But like, let's just say let me cut price a bit, okay? Let's cut price right here, okay? Let's just say you got out right here because, you know, we hit this full imbalance right here. You see that the time is ticking. It's almost 4 o'clock. You want to get out, secure your profits, okay? What are you going to do? Let's mark out 1800 opening, okay? So let's mark out 1800 opening right here. Right as price is coming down and 1800 opens, this is a good entry right here, okay? You can literally wait for 6 o'clock. And again, you're not just entering blindly at 6 o'clock because you're hoping it's going to continue in your direction. We're only going to enter this trade with the expectation that we're going to continue the previous trade in which we were just in. Okay, but if we take a loss on this entry, okay, we're done. This trade idea, we're just going to sit on it and we're going to wait until the next day. But because you're already up $2,600, you can take the risk. Okay, don't be scared of taking a risk. Okay, unless you're content, if you're good, but if in your head you know that we're likely going to continue, then by all means take the trade. Just show up to your charts and then enter. And where am I going to have my stop loss? I'm going to have it right here. Why? It's right beneath this mitigation block right here. Or sorry, this reclaim. Well, this is a mitigation block. Yeah, mitigation block right here. We also have this imbalance. Ideally, I'd want this imbalance to hold. This is going to be a $600 risk. So worst case scenario, I still walk away out of this trade idea with $2,000 profit, which is phenomenal. Phenomenal. So we're going to go ahead and buy again right here. And I'm going to put my stop loss right beneath this low. I'm only risking $620. So we're going to see if it plays out. You can see here it's starting to play out. At this point, my stop loss is going to go to break even. And then what are we going to do? We're just going to simply wait. What are we waiting for? I want to see now this liquidity get taken. Okay, obviously we already saw that it got taken, but I want to see this liquidity get taken. But this is how you could re-enter into that trade and hold your position for a potential swing. And you're just going to let it ride. You're not going to trail too aggressively too soon. Now, okay, every time we create a new structural point is when you trail your stop loss. So right here, you can trail. And then, you know, once this structural point gets created and broken through right here, again, you can trail. And then you want to also pay attention to the higher time frame. So on the 1 hour chart, you want to wait and see for areas to be rebalanced, redelivered rebalances to occur. And then here you can, you know, obviously you might be asleep during this time, but you might wake up like at this point right here, after we have here, like my take profit will likely be like, I'm putting my take profit here and I'm going to go to sleep. Okay. Now this might be new to some of you guys, but when you're on the higher time frame, it's okay. You don't have to worry about your stop loss getting tagged or getting spiked out or whatever. And gold doesn't really do too many liquidity sweeps like Nasdaq does on a intraday level. It does a lot of higher time frame ones. So you're good in that regard. And then we're just going to continue to hold it and we're going to see, okay, boom, We got taken, look at that. $7,500 profit off of one trade idea, which we had to exit because of maybe the prop firm rule or whatever, but you literally just risked $800 and then now you're up 7,500. That's crazy to me. That's absolutely insane just off of this price action. So I'm gonna go ahead and cut off the video right here. I'm not even gonna go over price in this video in regards to Nasdaq. We can do that another time, but I really just wanted to give you guys some insight on a little bit, give you guys a nice lesson on utilizing higher time frames, how to trade gold. I hope you guys learned something new from this. It's very, very effective. You know, using the higher time frame. Like I literally laid out everything. Look how clean this price action is. It's beautiful. Real quick before I end this, I really want to get into the narrative as well. And you know, I urge you guys to do this on your own time and backtest. Like the homework assignment for this is to go here and just like I broke down this segment of price, I want you to break down a segment of price on your own chart and do this yourself on gold and share your findings. Like send me a screenshot like this. Literally have everything outlined here, mark out everything, make sure you label everything according to the time frame that you're on. So this is a 15-minute bearish fair value gap. Mark out everything, label everything, and then screenshot it here and share it in the chat. You can do copy image, download image, open image, a new tab, whatever. And it's gonna open up a chart right here for you. And then just share it. Share your findings, share everything that you did, talk about it, write on it. You can even use like a text box. You can write whatever you have on there, write out your narrative. If you wanna have specific candles outlined, you can use this tool right here. Where you can specifically say, you know, write out whatever, and then you can just type out exactly what you see and what it is that you want to, you know, annotate on your chart. Now, real quick, I'm gonna go ahead and exit the replay mode, and I'm gonna go back into the higher time frame. I just wanna explain some narrative briefly, okay? If you go back to the 4-hour chart right here, we can see here, okay, price obviously upon breaking here, we came back down into the range. Now, why is it that I exited right at this high? Okay, why isn't that I'm trying to hold for this overall high? Because this is a structural high. This is the high that's responsible for taking out all of this liquidity. So once we take out this high, I'm not expecting prices just immediately push through. I'm expecting some sort of reaction off of it. So you want to be mindful of these targets. Like, although we want to hold our trades, you also have to be a little bit reasonable. You're not trying to be extremely greedy here. So right as price hits here, now what am I doing? This is the new range, okay? I'm gonna go ahead and clear some of this chart. This is gonna be the new range from this low up to this high. So what am I gonna do now? I'm gonna wait, okay? If I'm considering longs, this is where you just sit on your hands, okay? Yes, you can take shorts in this area here, that's fine. If you find shorts because we are above the 50%, but what do I want to do? I wanna wait for the highest probability setup. I'm gonna mark out the origin of price, okay, which is right here, right at this order block right here. And what am I gonna do? I'm just gonna sit on my hands and wait. I'm gonna wait for price to come back into this area. And again, we can repeat exactly what we just did in this segment of price right here. Again, we can zoom into here, go down into the 15-minute time frame, wait for entries, whatever, and then mark out our findings and then target this high right here. Okay, and then I want you guys to do that in your own time, because if I do that, it's gonna take another 40 minutes and I have stuff to do. So go ahead and do that on your own time. Again, mark out the reasoning behind this, and maybe later I can explain a little bit about this price action. But you know, I took this entire short down pretty much. Like I was entering and exiting multiple times. I did have one bad day where I mismanaged my position, but overall I made $20,000 both across my live account and my funded account total collectively combined, just because of this entire run and understanding where we were. So I understood that relative to the range from this high down to this low, we were above the 50%. Okay, I'm not gonna mark it out, but the 50% is relatively right here. We came up, I saw that we had this swing point right here. Okay, now we failed to push through. I noticed that right here, once I saw, okay, price swept this high, okay, then we also had this imbalance right here on the 4-hour. We had this imbalance here on the 4-hour, okay? We came down, we rebalanced this imbalance, and then this candle pushed up, okay? But if we were actually going to push up through this high right here, if we were actually gonna push up through this high right here, this candle right here would have pushed through it. But what happened, this candle immediately opens and then we displaced. Once I saw the 50% of this candle get violated, is when I was like, okay, yeah, we're not going up anymore. And how did I know that? So right here, I was watching and monitoring price. At this point, okay, I was like, okay, we could push up higher, but it's likely not going to continue to push up. Why? Because we've already swept liquidity right here. We've already come down. We've rebalanced and bounced. And now we've displaced. We have displaced out of it, okay? But the narrative is pointing to both sides, essentially, because we swept liquidity. We pushed up. We came down into this order block right here. I'm thinking, or this swing point right here, this rejection block, whatever. I'm thinking, okay, we could push up. This candle opens. Cool. We push up. Now, this candle opens. We don't immediately push up. What did we do? We started violating. Once we violated the 50% of this specific candle right here, let's mark out like the 50%. I dropped down into the 15-minute time frame. I saw that, okay, we're likely not going to push. Immediately, I shorted right here. Stop loss right here. That was my trade right there. And originally, I was targeting this sell side liquidity right here. But because it's like my first time trading gold and I wasn't like, I was confident, but I was up a lot of money. I was, you know, I had an emotional close. Let's just say it like that. Okay, I had my take profit set right here. I would have made like 15,000. I still ended up making 9,000. I exited right at the 50% of this order block on my accounts. But that was my trade right there. And that was good. It was beautiful, beautiful, beautiful trade. I exited right here. Either way, I still won. I think I had my stop loss right here. And then, you know, I could have held it. I would have made so much more money, whatever. I was good. I was content. I didn't need the whole move. But my narrative was there, okay? And again, this would have been my overall target right here had I held for the entire run. But yeah, again, I'm going to go ahead and end everything here. I hope you guys learned something new. If you see, you know, something that you want me to talk about or you have something you want me to talk about, just let me know. I'll be more than happy to discuss it. And yeah, start looking at gold, start looking at, you know, Nasdaq right now, because we're at all-time highs, it's not really clean, so kind of stay away from there especially if you're new. If you're new, I recommend that you backtest gold a little bit more on the higher time frame. It's going to give you some more time, especially, you know, a lot of you guys that are saying like you work or whatever, gold is a great option for you guys. Enter in with maybe a couple micros, get the MGCQ chart, pull that up, trade micros, trade 2 to 3 micros, 5 micros at max. Enter off the 15-minute and just let your trade play out. And, you know, you could be at work if you're driving. I know some of you guys are truck drivers. A lot of you guys are at work, whatever, oil fields, whatever you guys are doing. It's very applicable and you can just trade with peace. You know, you don't have to worry about too many entries or whatever. You just enter your trade, have a nice stop loss, and then you look at your position here and there. And you can actually put alerts on TradingView while you're in your trade to alert you, or maybe even if you're on Alpha Ticks or whatever, you can do that, or Top Step X, whatever it is that you're doing. Monitor your trade every couple of hours, see what it's doing, see where it's at, and just go from there. But that's going to conclude this video. Again, I've been talking for 47 minutes right now, so I hope you guys learned something, and we will speak soon. Goodbye.